So let me, first of all, I'd like to start by thanking Pat Boulay and New Business Minnesota for putting on this event. It's a great way for you to learn, and one of the primary goals should seek more knowledge, and this is a great place and it's a great opportunity because there's other speakers too that'll be talking on different topics. So a little bit about myself. I'm from southeast Minnesota, down in Rochester. My name is Steve Mangan. I had a CPA firm in Rochester for about 15 years, and then some changes in my life moved me up to Minneapolis, and so I've been up here, and my office is in Prior Lake, Minnesota. So a little bit about me. My practice, I deal with probably half of my clients are small businesses, and the other half are individuals. So they need either consulting work or they need tax preparation, and the businesses, we work with them on payroll too as well. So that's a little bit about myself. All right, so first we're going to spend a little bit of time talking about budgeting, and then we'll talk about setting goals and what's involved in goal setting. With respect to budgeting, one of the primary focuses that you start with is a forecast. You start by determining, you look ahead. I mean, you know, when you're looking at a time element, you're looking at maybe 3, and if you can, out to 5 years. The problem is once you get past 5 years, it gets a little muddy, and it's difficult to project. So, but what you do is you set up your forecast, forecast your sales, forecast your expenses, and we'll kind of go into that as we go down the road. You want to like I said, you want to be able to identify your future needs out 3 years and then possibly out to 5 years. Your budget and your forecast should support your strategic plan. What do you want to do? What goals do you want to accomplish? So, and then the other part is, once you've set up your forecast, once you've set up your goals, you want to be able to constantly update that as it needs to be updated, because sometimes your goals change. Sometimes, for example, you can't always project you know, the stock market, or you can't always project what unemployment's going to be. So there's a lot of factors that you can't determine, and that's why you've got to constantly keep that updated. When we're talking about goals, we're talking about what's a good goal and what's a bad goal. And if you take a look at good goals, an example of a good goal is where you are able to focus attention. And a bad goal basically diverts attention. So a good example of this might be if you've got a business that sells a product. Okay? Let's say the product isn't selling. Let's say it's an inferior product, it's overpriced, your ability to deliver is, you know, inferior to the rest. So what happens is you've got a sales force that doesn't want to do anything. Okay? So that being said, how are you going to get your sales force to sell your product? Okay, here's an idea. Here's an example of a bad goal. You want them to sell your product, so you tell them to get on the phone and make sales calls. So now a bad goal would be one where, well, they're out making sales calls, they call their friends, they call themselves, they call, you know, all their relatives. But at the end of the day, you look about a month down the road and you look at your sales reports and your sales actually went down. That's a bad goal. Your goal isn't to try to get people to make phone calls, your goal is to try to get people to sell. So that's an example of a bad goal. Also, good goals promote teamwork. They're less, how do I say that? They're not selfish goals. You work as a team. People work together versus work for themselves. And if you look at for example, if you're selling something and you want people to sell, you give them a goal. You say, well, you get a prize, okay? You have to give them something to get something, you know, versus, you know, working as a team. So you end up developing, as a bad goal, you end up developing where these people are more for themselves. And, you know, you want people to do teamwork. And so that promotes, good goals promote teamwork. Relies on intrinsic motivation. Well, intrinsic motivation is something that motivates because you want to do it. It's something you want to do. You're not out to get the carrot. You're not out to get the prize. You're not out to get the extra money, but you do it because you're motivated yourself. That's basically what intrinsic motivation is. Now, when we take a look at goals, we want to look at what we call SMART goals. Okay? Now, SMART goals, if you look on the right, they're SMART. It's spelled SMART. First of all, your goals need to be specific. You have to define. You want your goals to not be so vague that they don't mean anything. For example, an example of an unspecific goal would be, I want more sales. Okay. You have to be more specific than that. Your goals need to be measurable. You be able to say how much and how many. And also your goals have to be attainable. And if you look at goals, you want to say you want your goals to be out far enough so that you have to stretch and you have to work to be able to attain your goals. Okay? But you don't want them so far out that it frustrates you. Okay? So you want to have your goals attainable, but you don't want to have your goals, for example, you might want to say, well, I expect my sales to be 5% over last year. Well, let's say inflation is 8. That doesn't sound like a very good goal. So your goals, you need to go out and try to, in order to establish goals that will help motivate you. Relevant. Your goals have to be relevant. They have to be what you want to do. You have to decide what those goals are going to be. Okay. So that's part of setting goals. All these, when I'm talking about goals, they all have to be kind of set up ahead of time. Okay. The last is your goals have to be time-bound. Now, when we talked a little bit about budgets, you set up your budget. You say, okay, for the next year, I expect sales to be X. Or for the next year, what I would like to do is I would like to have a bigger sales force. I want to be able to offer benefits to my salespeople to get them to not only stay with me, but also produce more. So if you look at that, that's basically what your SMART goals are. You want to stay on track, like we talked about. You're looking at a 5-year period of time at the max. But at the same time, you also want to look at, you want to create a shorter period of time, a 90-day period of time, and then you want to go down and you want to take a look at it at a shorter range on a weekly basis. You want to be able to take a look and say, this is 90 days I want to be here. Okay, you want to be there. But at the same time, you want to be able to watch and track that as you go. And then assess yourself. At the end of the 90-day period, for example, did I get where I want to be? And you need to be honest with yourself when you're looking at that. And last but not least, you don't want to quit. You want to continue. You want to continue to grow. You want to continue to try to strive to meet your goals. And I know that's probably the hardest part, is not quitting, because it's easy to get busy. It's easy to do other things, but it's more difficult to continue and meet your goals. There is really there's no secret formula for setting your goals and making sure you stick with your goals, but there are 2 things that will make a difference, and that is hard work and responsible spending. You do have control. You have control over your income, and you have control over your expenses. This is just an example of I just put together a graph, and you can take a look at this. This is just an example. What I did is I looked and I took, sales at 192,000. This is an example where it has no product costs, no direct costs. It's got selling expenses, general administrative expenses. And if you look at the very bottom, you got yourself, your goals, you get a paycheck. People need to learn to pay themselves. Income and expenses, you want to evaluate your budget. You want to compare your budget. Now, some people, if you're new and you've never established a budget before, or you've never had, this maybe be the first year that you've been in business, you might want to take a look at some industry standards, because you can go out and Dun & Bradstreet, they got all kinds of numbers, and you can compare yourself to what other industries in the same area, the same size as you. So, you want to create a structure. In other words, what I mean by that is, say for example, your goal is to pay off debt. So what you want to do is when you put together your structure or your plan, you put that in there. I'm paying off so much debt month after month or year after year, and it's always there. So your whole structure should be based on what your goals are. Another important feature, make sure that you keep good records. Because if you don't have your good records, I don't know how in the world you can compare anything to anything. I have people come into my office all the time, and they have no records. We have to develop the records for them. So it's very difficult to budget when you don't have good records. There again, we talked about paying yourself first. That should be the foremost as you get paid. So many people get hung up. I know they got to put the money back in the business. They never have anything for themselves, and pretty soon they're out of business. So pay yourself first. Establish what your wants and needs are. Determine what you need and what you want. And you know, wants, that's kind of taking a look at on a personal and an individual side, but on a business side, you might want to look at your expenses. You got fixed expenses, you got variable expenses. And then where you go from smart, you go to smarter. And then you take a look at, when you look at smarter, you look at evaluating and reevaluating. Continue to update your goals in your budgets. And then watch your cash. Cash is, I said this before, cash is always king. You've got to have cash. If you don't have cash, you can't operate. Or some way of getting cash. So where do we go from here? It's never too late to start. If you haven't started, you can start now. It's a great time. Look at options. Set up retirement plans. And if you don't get it, ask for help. You know, that brings up one last note. Actually yesterday, I had a friend of mine. I sing with a group, and he came over, he called me up last night, and he said to me, he says, Steve, he says, I think I'm in trouble. I'm only getting 4 hours of sleep. I spent the whole week. I only got 4 hours a night of sleep. And he says, you know, I get mail from the IRS and the state, I don't even open it. You know, he's just scared stiff, and he's saying, well, should I bring it into you? And I'm sitting there, I said, I don't want a lot of paperwork. I want to know where you are now, and you've got to move forward. And that's what people have to do. You have to get out of the rut. You can't go back. You've got to say, we're going to start here, and we're going to fix it and go forward. So that's kind of what I've got to say, and if I'm certainly open to questions afterwards. I think we're going to kind of wait till we're all done, and then you can ask questions. And if you've got specific questions, I guess you can come to me separate, and I'll certainly try to do the best I can to answer. Thank you.